Welcome to the Daily Update Podcast, where I'll go over the action in the market for Tuesday, May 27th, and we'll see how things look for Wednesday, May 28th. The S&P 500 delivered a solid performance, climbing 2.05%, driven by strong showings from growth stocks and megacaps. However, trading volume remains below average, suggesting some hesitation in the rally. The day started with a gap-up futures after news over the long weekend that delayed a 50% tariff on the EU until July 9th. This reversed an earlier market drop triggered by the tariff announcement before Friday's open. The S&P 500 hit resistance at 59.24, with late-day buying and short covering pushing prices higher into the close. Despite the gain, the market remains in a sideways trend, lacking clear follow-through. Volatility eased, with the VIX dropping to 18.98, below the key level of 20. On the economic front, the 10-year Treasury bill fell to 4.43% from 4.51%, providing a tailwind for stocks. This drop below 4.5% has been widely watched. Consumer confidence surprised to the upside at 98, beating the forecast of 87. Durable goods orders fell 6.3%, but better than the expected 8.1% decline. Housing data was mixed, with the FHFA House Price Index down 0.1% and the Case-Shiller Price Index up 4.1% year over year, slightly missing expectations. Inflation did tick higher, with Truflation reporting 2.08% inflation. The sectors told a clearer story. Discretionary and tech led, while defensive sectors such as healthcare and staples lagged, signaling a more risk-on environment. Technically, the market remains above its short, intermediate, and long-term moving averages, which is a bullish sign. However, momentum indicators such as the PMO and TTM squeeze are mixed, and the ADX shows no clear trend. The NASDAQ 100's bullish percent index is extreme positive, but the S&P and NASDAQ BPIs are lagging. One ongoing frustration for traders is the market's randomness. Off-hours policy announcements, such as the tariff news, have caused large gaps up or down, disrupting technical analysis and making trends harder to predict. Geopolitical and policy-driven volatility continues to overshadow traditional market logic. Looking ahead to Wednesday, May 28th, key events include the release of the FOMC meeting minutes at 2 p.m. Eastern, which could help shape market sentiment. The MBA Mortgage Applications Index is also due. Seasonality is neutral to positive for the Dow and positive for the S&P and NASDAQ, offering a potentially supportive backdrop. Sentiment remains cautiously optimistic, with the market holding above key moving averages, but investors seem to be hedging more, favoring puts over calls as the equity put-call ratios continue to rise. Risk looms large, with potential volatility from unpredictable administration news. Later this week, GDP data on Thursday and core PCE data, as well as consumer sentiment, is due on Friday. Technically, support at the 50 and 100 period moving averages has held so far, but low volume and weak momentum call for caution. A break above 6,000 on the S&P 500 could signal stronger bullish momentum. In conclusion, the gain of over 2% on Tuesday in the S&P was encouraging, but the market lacks consistent trends due to news-driven volatility. The charts are showing slight improvement, but momentum remains elusive, and policy announcements continue to frustrate traders. Investors should stay hedged and vigilant as we navigate this unpredictable environment. Thank you very much, and I will talk to you in the next podcast.